Hi, I'm John with Tax TV, here with an explanation of making an 83B election, which refers to the tax code section that allows for the election. To attract talent and employees, startup companies frequently offer a variety of equity incentives, such as stock options. As an additional enticement, companies may issue restricted stock, which provides extra benefits to the recipient as long as the 83B election is made. Restricted stock refers to stock that is forfeited or subject to repurchase by the company upon termination of the business relationship with the employee or vendor. Generally, employees receiving restricted stock must report income and pay tax at ordinary income tax rates as the stock vests or the restriction lapses. The amount included in income is the difference between the fair market value of the stock upon vesting and the purchase price paid. This could result in a person including large amounts in taxable income as the stock increases in value and vests each year. An 83B election eliminates this inclusion of income each year and often avoids paying taxes at the ordinary income tax rates. If the election is made, the buyer recognizes income on all stock upon the purchase. The purchase price and the fair market value are often the same, eliminating the inclusion of income. As the stock vests, the purchaser would not recognize any income. Let's look at an example to see the difference. Suppose an employee receives 1,000 shares of restricted stock that vest in 2 years. When the employee purchases the stock, it's sold for a penny per share. Further, suppose that in 2 years, the value of the stock increases by $50. If the election is not made, the employee would be required to include $49,990 in ordinary income. If an 83B election is made and the purchase price was equal to the fair market value, the employee would recognize no income at the time of the purchase nor when the stock vests. The employee would only recognize income when the stock is sold, and all the gain would be capital gain. Another benefit of making an 83B election is that the capital gain holding period begins on the purchase date. In order for the election to be valid, the buyer must file the election with the IRS prior to the date of the stock purchase or within 30 days after the sale. There are no exceptions to this rule, so it's very important that the election is made on time. For more information about making an 83B election or other stock options, check out taxtv.com.